So we're talking about the 7 layers of security in the proof of work network. And the first layer is energy, and the second layer is technology, and the third layer is political. And in all these cases, Bitcoin is becoming more secure, more long-lived, because it's co-opting important actors in each of these 3 areas. We need a network of politicians to defend the network. You need a network of technology providers and semiconductor providers in order to secure it. We need a network of energy providers to secure it. The fourth area that's fascinating to me is the financial dimension of security of Bitcoin. Because miners are capital intensive, you need capital to build the mining facilities and to acquire the rigs and to do the engineering. So that capital comes from outside the Bitcoin system. So it's US dollar capital for the most part, or it's currency equivalents. Bitcoin miners, therefore, are recruiting a network of fiat investors. There's a whole set of conventional investors. They can't buy Bitcoin, or they wouldn't buy Bitcoin, but they would buy an operating company that mines Bitcoin. Kind of like people that don't want to own gold, but they want to own gold mining companies. So this is incredibly stabilizing for the network. For example, today the news was Fidelity had bought 7% of Marathon. So a big, credible, traditional investor, I think Fidelity has like $2 trillion, trillions of dollars of capital, and 20 million customers. And they've been around forever, right? That company is now invested in a Bitcoin miner. Now you've got hundreds of millions of dollars to lose if the Bitcoin miner fails. And so the investor has a vested interest in protecting their interest. And so Bitcoin recruits a whole network of legal, marketing, and political lobbying capability as it recruits investors. There are trillions and trillions of dollars in the conventional economy that for legal reasons or political reasons or business reasons or tax reasons or practical reasons and technical reasons, they can't buy Bitcoin. But they can buy a security based on Bitcoin. So in fact, from their point of view, they would prefer to buy the publicly traded company, or if you're a public company investor, you would prefer to buy the publicly traded company. And if you're a private investor, you prefer to buy the stock of a privately traded company. And that's just what their pool of capital does. If you want to co-opt that financial network of investors, you need a capital intensive use of proceeds. So Bitcoin mining is capital intensive and proof of work is capital intensive. If I snap my fingers and I go, say, to proof of stake, and you don't actually need to buy equipment, and you don't need to engineer the facility, and you don't need to buy the energy, then you don't need the capital. Well, then you don't need the investor. Then you don't need the investment banker. Then you don't need the market they trade in. I guess then you don't need the support of the congressmen, the senators, and the regulators they know. And you probably don't need the media journalists that they talk to. You're losing all of that, right? And you're also starting to look like you've created your own different system. Okay, you created a virtual world where the politicians and the media and the capital and the bankers in the other world are irrelevant. Bitcoin mining bridges the Bitcoin universe, the crypto asset of Bitcoin, with the physical and the political universe. And if money is it's socioeconomic energy. Well, there's two elements. That the energy part says that it needs to be thermodynamically sound and conservative and correct. But the socioeconomic part says you need the politicians and you need the media and you need the influencers. The process by which I construct Bitcoin mining companies is a process of recruiting the support of bankers, investors, politicians, and influencers, as well as technologists and energy producers. And that is a virtuous process. That is actually the hard work. You could think of it as when you're building a Bitcoin mine, that's the cash-in, or that's the foundation upon which you're building the bridge. You know, if you ever look at these bridges that cross the Chesapeake Bay, they have to dig down and they have to put in place massive pilings in order to build the bridge on top of it. So if the substructure and the foundation is weak, then the bridge itself is prone to collapse.